Let's take a look at some information and charts on OneInch for Brave New Coin. OneInch is a DEX aggregator, multi-chain, Ethereum, BSC, and Polygon that makes the on-chain analysis more difficult than usual because you have to look at 3 chains and sort of bring that information together and then glean a signal from it. And it's not going to get any simpler over time. Just like Matcha, OneInch has limit orders now as well. Unlike Matcha, they have a token. You could argue that ZRX is Matcha's token, but Matcha does not have a native token in and of itself. Matcha, basically the other DEX aggregator competition. There's a governance side of this for OneInch as well, and there are multiple pools. So there's AMM stuff and liquidity farming stuff as well, although that's dropped off over the past 6 months, I'd say. At one point they had ETH, USDC, WBTC, they had a bunch of others that have since ended. And because of that, the liquidity has really dropped off, volume has really dropped off, and obviously liquidity providers' earning has dropped off. This helps not dilute existing OneInch. So I don't know what their exact plans are for total emissions of supply, if they even have a plan specifically, or how that's going to get impacted by governance. But that's definitely one thing to think about and to consider. And if we look at broad information on DeBank and DeFi Llama, trading volumes, again, have kind of flattened out over the past few months. Still in the multi-millions, so not exactly terrible. Transactions still relatively high. Users still relatively high. So this doesn't look as dramatic as maybe the token price would lead you to believe. It's still being used by a rather large number of people on any given day. And this is kind of without liquidity mining. Liquidity mining will bump these numbers up because there's just more people moving things in and out of the token on-chain than otherwise would be. And DeFi Llama also agrees with pretty much the other stats in that TVL is kind of, again, still in the multi-millions, but not in the billions, largely because of incentives that just aren't there anymore. Because it's a DEX, we can look at all the other DEX type metrics. OneInch over the past 24 hours is even ahead of Sushi, ahead of Curve, ahead of ZeroX, Matcha, right? It's hard to know how much of this is double or triple counted as an aggregator. If you're trading between aggregators, let's say, things can get weird on API side of things versus Matcha versus ZRX native, and things can get really messy, right? Like if I'm on Enzyme and I'm trading on Paraswap, one trade can get routed through 4 or 5 different exchanges at once, and it'll kind of count all of that as volume everywhere, right? Uniswap is still by and large the leader, at least on ETH, as far as the ETH side of things, if over 50% on any given day. If we look at OneInch volume in the blue and gold here, it's really very little volume relative on any given day. Uniswap was the old OneInch exchange name before OneInch existed. And by month, it doesn't really show up here in the grand scheme of things as an aggregator. It's mostly just a Uni Show, Uni Sushi, the main exchanges. So these DEX aggregators will need to outcompete the main exchanges by finding cheaper routes, better routes, lower expenses for trading. If it goes multi-chain, that's for the better, as what OneInch is doing just opens them up to more traders, more volume, more transactions. If we look at the transaction counts for the token, this was the initial distribution here, and ever since then it's kind of just gone to nothing. Again, a lot of this is related to liquidity mining. It's not helping that price has kind of just been sideways since January, right? It had the big initial release, and then prices just sat sideways, unlike Uni or Sushi, which have appreciated a little bit harder than OneInch has over the past 7 months. Active addresses, again, do not look bullish. So it's hard to be bullish when you see stuff like this as far as on-chain stats are concerned. And then NVT, an inverse metric of on-chain activity relative to market cap, is rising to what looks like all-time highs. And that's incredibly bearish in a vacuum, assuming that NVT is tooled correctly for stuff like OneInch, the token, and not necessarily a currency or medium of exchange or stuff like that. So in general, to be more bullish on this, I'd want transaction counts, active addresses, volumes, You want all this stuff to be rising significantly, right, over time. You know, if you contrast this with Uni or even Sushi, it looks a lot different. They have a lot more going on with AMM side of things and just flat out DEX side of things than OneInch does. Here was a tweet from Polygon talking about volume transactions and users. Polygon stuff is still super early, so it'll be interesting to see what kind of uptick this has over time. And if when gas prices go down, we even need stuff like Polygon, we even need DEX aggregation. You know, if it's so cheap that nobody cares if routes are optimal, then things like Matcha and OneInch may be less relevant. We'll see. OneInch Google Trends also declining from all-time highs. This is potentially a real word that people would search for, but this looks very much crypto related since January, and that's fallen off as well. So everything is telling you, be careful of price here because active addresses, volumes, transaction counts, all of those are down from highs, as is price, right? It's no surprise that all this stuff is correlated. Looking at technicals, this is the 15 to 200 EMA, monthly pivots, volume, RSI, and then VPVR here. I really like VPVR when I can see the entirety of the trading history. It really gives you an idea of where most of the volume support resist levels sit. So one way to read this is there's a significant amount of volume in the current area based on price consolidation at around 250. On the way up, there's increasing resistance between 380 to 5. And on the way down, there's some support at 170 and significant support at 121 called the point of control, basically where all of the volume of the visible range, or most of the volume rather, sits relative to everything else. So on any stabs down, it's unlikely to breach that level on the first try, and any stabs up, it's unlikely to breach 5 on the first try. In general, after January, it's basically a 2 ranges, right? This 380 to 5 level and then 380 to 250. The 15 to 200 on the 8 hour are still bearish, and you have to look at lower timeframes for OneInch because there just isn't enough trading history to look at the daily to really make sense of it, unless you're using low EMAs, low timeframe EMAs, which is what you're effectively doing anyway on lower timeframes on the 8 hour. Monthly pivots show support at 170, which matches the VPVR level on the way down, as well as 81 cents, which is far below that 121 support. On the way up, you have an R2 at 5. So there's tons of levels here based on volume, based on math of the pivots, just based on order blocks, I guess you'd call them, on the way up and on the way down. And in the near term, trend-wise, I would watch this 5200 flip over the next month or two on the 8 hour, because it looks like it's had a pretty good signal. It held as support here, crossed bearish, and then it's been bearish ever since. One thing I noticed for a lot of these alts over the past few days was an uptick in Binance volume, specifically the DeFi stuff. So for OneInch, this was a multi-week, multi-month high in volume over the past couple days, which led me to believe things were going to be slightly more bearish, or sorry, slightly more bullish in the near term, especially when you see volumes ticking up across the board. So either people are getting bullish DeFi or people are exiting the exchange via DeFi. I assume it's the former and not the latter, but I guess time will tell with additional Binance headlines. Here's the cloud on the 8 hour, tells you the exact same thing. The 15 to 200 8 hour EMAs tell you in that we are still bearish as we're below the cloud here. We've been below the cloud since early May, and until we're back above $3, it's unlikely to be default bullish. When people say they're bullish or bearish, when they're bearish, they expect lower lows or neutrality. When they're bullish, they expect higher highs or neutrality. Usually if this 360 to 580 range is holding, right, you buy the lows, sell the highs. If you're more bearish, you'd sell the highs. Or sorry, you'd still be selling highs, but you're less likely to keep buying lows, even if we're ranging, because eventually if we're bearish, you expect these lows to break, right? So anything lower here and it's going to stab into this 170 area. On the OneInch BTC pair, it's really been ranging since February. You can see it had kind of shades of inverted head and shoulders. Nothing perfect, but if you kind of squint, you can see these reversal patterns breaking up. And ever since then, it's just been just random walk, turtle soup, garbly-gook nonsense, right? Just trendless nonsense mayhem. So no real signal there whatsoever. Certainly leans bearish because it's below the cloud. And until it's above 9K sats in this case, I wouldn't get too bullish on it. And the ETH pair also had this inverted head and shoulders, head, neck, shoulders, like over and over again, just refused to break up. And ever since then, it's just been down only. Even this here looks like inverted Adam and Eve, bearish continuation. You know, it doesn't look scoopy. It looks looks pointy, and it looks like it wants lower lows, even with the point of control basically at the current price. So most of the volume historically has been here. You know, it's retraced the entire January bullish rally, and it's certainly threatening lower lows. Lastly, I'll just mention the ETH-BTC Fund. I trade for Techemy Capital, as well as the managed DeFi portfolio, non-custodial portfolio management tools where you can send ETH to USDC into the smart contract or just watch what I'm doing. AUM, allocations, performance, all the trades here, deposits, withdrawals. You can see I'm trading through Paraswap, Compound Lend, Aave Lend, Yearn Lend. And one thing that's interesting about the trading decisions for some of this stuff is when the yields are high, SNX, Bell, these yields were extremely high. That certainly influences my decisions beyond the TA to enter into some of this stuff. OneInch was around 7% on Yearn. Now it's currently at 2.88. This is variable. It'll go up and down, but I'm sure it's affecting other traders' decision-making process as well. In that, you know, if you see this high yield, you're more likely to want to just buy and hold it. It's like if funding is negative on an exchange, you're less likely to short unless you're super sure, and you're more likely to just be default long to collect that funding, right? That's basically what we're doing here. We're just collecting funding. Prices may not be incredibly bullish despite mean reversion attempts across the board, but a lot of this stuff is still getting decent funding. I mean, 3% isn't amazing, right? But it's not zero now that I can access Yearn on Enzyme. And sometimes the Oracle stuff is a bit wonky on the pricing. Enzyme, I don't know why, if it's subgraph side of things, or, you know, you'll see this move up and down with the Aave USDC price, which is essentially just $1 most of the time. But if you ever want to double check any of that, you can go to Xerion, and their numbers usually update quicker than the subgraph stuff on Enzyme, and the percentages usually update quicker. So if you're ever curious on any questions, you can double check it there. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.